Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 16th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, we've got a lot of economic data to go over and some yet to come, actually. We did get building permits, came in slightly under what was expected, but that doesn't really necessarily mean a whole lot in my eyes. It just means plans on building, but people can pull permits and don't always use them right away. So sometimes when they pull more permits than what was expected, those permits are still able to be used for some period of time. We also had consumer price index month over month came in at negative 0.2%, so no inflation there. Core CPI came in at positive 0.3%, and that was slightly higher, but still not at anywhere close to what the target of inflation the Fed is looking for. So we also had housing starts was a little bit better than expected. Capacity utilization slightly downtick 76.7. 76 is not that great anyway. It's just not really firing on all cylinders. Industrial production came in at negative 0.5%, was expected negative 0.2%. Again, we're looking at negative industrial production. That's just never a good thing. Then we had the crude oil inventories, which is the EIA, Energy Information Administration, crude oil inventory number. Came out at 1.3 million barrel build. It was expected a 2.9 million barrel build, and it is continuing to increase. Now, one thing that to note here, there's going to look like there's going to be a continuation of this build. We had a pretty mild winter. A lot of these refiners like to use the heating oil, produce the heating oil, and kind of pull back on producing gasoline going into the summer season. We also have this summer blend of gasoline being produced, which kind of increases the cost of gas at the pump. So if you've seen your increase in cost at gas at the pump, that is because of the summer blend. The one thing is there's a 120-year glut, or the inventories are at a 120-year high. That goes back to the beginning of when they started to keep track of this. So something to keep in mind that there is just a ton of oil out there. Let me make sure that I covered all of that. Then we have the FOMC today at 2:15 Eastern. The number says it's out at 2, but they usually come out with results at 2:15. So keep your eyes out for that. I don't think that they're going to really do anything, because at the end of the day, we just have seen Europe increase their quantitative easing, and if we start jacking up rates, that's going to send them into a tailspin even worse. So I think that Janet Yellen's going to hold off and wait to see what the global economies are doing before she makes any moves there. So having said that, I haven't done a whole lot today other than a couple of earnings trades that I've been looking at for a while. And with volatility continuing to come off, there's just nothing that is very enticing that has high implied volatility right now. It usually has something that may have an earnings in it. But as you can see right here with those crude oil inventories, a little bit lower than what was expected of a build. We're seeing crude oil start to push higher by about $1.50 right now, but well above that $35 line in the sand that is going to act as a major support area. Nasdaq, as you can see right here, we're up about 13 points. We're negative. We were negative earlier this morning, basically right off the open, and then have continued to rally, probably because these numbers weren't horrible or anything really off what was expected, and it's just a benign market, or benign economy, I should say, which would lead one to expect that there is not going to be a rate increase anytime soon. And we're seeing the equities rally for that. As you can see here, Nasdaq was leading the way. Emini S&Ps /ES up about 2 points on the day. If we go and look at the intraday chart, the 15-minute breakdown, as you can see, early this morning we started selling off, and then basically off of the open, we started coming right back off of those data points and everything else. It didn't really hurt anything. So, but we found a little groove right here at this value area for the time. So that's where time and value is being accepted right now, at least for the past several days. So probably see a pretty tight range for the rest of the day until that FOMC minutes comes out, or the FOMC results should come out. The one thing I did do was in GM, did this earnings trade that I'm doing a webinar on Friday. So looking at a couple of them, GM has really low implied volatility. As you can see, it's down near its lows. So this was a good candidate for this type of strategy. And I did the April 2 weeklies with, I think it's 27 days to go. And then I did the April 4 weeklies with 37 days to go. So I did the April put calendar, and I did the 30 and a half puts, the 30 and a half strikes there. So it's the April 2, April 4, 30 and a half put calendar. And I paid 27 cents for that trade. So I still have another cycle that I can roll out, collect a little bit more premium for those puts, and try and get my cost basis down to relatively nothing. If I can roll it out for another 27 cents, then I'll have those puts on for the earnings for free. And that's the whole idea behind this whole thing, is to try and get puts on for free, make some money going as volatility expands, and be able to go into that earnings binary event with a free trade on. All right, so check out Friday's webinar. Go to protraderstrategies.com, sign up for that. It's a really good one. Last Fridays we did it on calls. That went over really well. This one is going to be a really good one as well. So that's all I got for you today. If you can't take that, take it easy.